Okay, so I'll call the meeting to order. Do I have a mover? Councillor Sanik, seconder. Councillor Schell. Do I have an approval of the agenda? Moved by Councillor Osanik, second by Councillor Schell. Do we have a confirmation of the minutes? Any changes or omissions? Just moved by Councillor Osanik, seconded by Councillor Schell. Sorry?
Yeah, we've got to vote on
that one. Jumpins. All those in favor? That passes. Do we have any disclosures of pecuniary interest? Seeing none. No delegations. No briefings. Moving on to business. If I get an excuse me, if I could get an introduction for the 2017 audited financial statements. Please and thank you.
Thank you, Mr. Chair. So I thought what I would do, if it works out okay, is to just do a very high-level overview of the financial statements, and then turn it over to the KPMG audit partner, Laurie Huber, who would like to go through the audit findings report with you. So just looking at the financial statements, and I'm going to skip over the audit report in that first part because Laurie will be addressing that, and turn your attention to page, I think it's page 10 of the agenda. Let me get this right. Page 4 of the statements, but page 10 of the agenda, the consolidated statement of financial position. So just to remind the committee, so these are consolidated statements. And in that regard, they include the city operations, which includes the gas, water, and sewer operations coming over from Utilities Kingston. They also include the operations of the Downtown Business Improvement Area, the Public Library Board, the Housing Corporation, a proportionate amount of the public health, so the city's proportion of the public health based on the funding, and then the Kingston Hydro Corporation is set up as an investment, so the specific operations are not included in there as a consolidated. So some of the numbers look a little bit different from what we've reported at the end of the year. That's why, because these do include the other operations consolidated in there. On page 10, there was just a couple of numbers that I wanted to bring to the committee's attention. First of all, you'll probably notice right at the very top under financial assets are cash, which has gone down about $18 million. There is a schedule later on in the financial statements that gives you a detail of the movement of cash transactions throughout the year, and a reconciliation from last year's balance to this year's balance. But primarily that results from the investment that we've made this past year in our tangible capital assets. And you'll see, just going way down the page under non-financial assets, you'll see where we've reported our tangible capital assets at $1.5 billion. And you can see the almost $100 million increase there in that balance. So netting out the various operational amounts that are within that, the main difference, or the net difference in the cash, has gone invested into that. The other balance that I wanted to bring to your attention, just to relieve any concerns, is 3 lines down, the accounts receivable. And you'll see that's gone from $26 million to $42 million. There are a couple of things that have driven that balance this year upwards. There's about $6 million that relates to Utilities Kingston, and when you see the Utilities Kingston financial statements, particularly the commodity variances for the gas portion of Utilities Kingston, there tends to be variances there where there's been commodities paid for and we haven't collected back yet from the ratepayers. And then we also had the carbon offsets this year in 2017, which was new. So that also created a variance. So between those was about $6 million increase, particularly with the carbon offsets being new. There was also about just over $1 million of unbilled revenues as well for Utilities Kingston. So they do a calculation at the end of the year to, if they were billing everybody right up till December 31st, what would that balance be? And so that was a little bit higher as well, so that's in there. And then finally, there's a large grant receivable for the waiver funding that we had in 2017. So we had about a $5 million bump up there for some grant revenues that we'd be receiving subsequent to year end. So that just explains that large balance there. The other thing that I just wanted to bring to your attention was the debt. So looking down in the liabilities, you'll see our temporary loans have gone right down, and you'll see our long-term liabilities, we're at 292 million, are now at 368. The committee will remember that council approved a debt issuance in 2017 of $80+ million. And so of that debt, we had taken advances on that, construction advances, which would have been up in the 67, so that went down, and then we turned it into long-term debentures during the year, which put the long-term liabilities up. The municipal equity, the 1.3 billion, I'm going to come back to that in a moment. Just going over to page 11, this is our consolidated statement of operations. Again, this will have all the consolidated entities in it as well as the city. And you'll also, if you're trying to do some comparisons, so these statements have been recorded under Public Sector Accounting Board principles, which is pure accrual accounting, which is a little different from our, what I would call our budget accounting, which is cash accounting. So for instance, in this statement, we would have amortization of assets, not something that we have in our budgets, but is included in here. And so we actually amend the budget column to account for those PSAB adjustments. And there is a note number 17 in the financial statements that does a reconciliation from you from what council approved as a budget for 2017, and then the adjustments that we made to come up with the column that's included here for comparative purposes. And then finally, just turning to page 13. So this is our schedule of municipal equity, which was the bottom number on the bottom of the financial statement. So this is the total municipal equity, and this schedule just breaks down the various components that we're a little more used to seeing with respect to our ongoing reporting during the year. So the first section, the current fund surplus deficit, these are the numbers that you'll see reported in our fourth quarter operating report, which came to council last month. So if you went back to that report, these tie into those. So this is our actual cash basis of reporting and what we generally refer to as our general operating surplus, as well as for water, sewer, and gas. The next section just reports our total investment in tangible capital assets. So that does make up a component of our total municipal equity. We do have some unfunded liabilities. So these are liabilities that under the Public Sector Accounting Board principles, we have to report as a liability, but we don't fund them. So basically, we don't raise taxes for them. So an example of that is our employee future benefit obligations. We have some sick leave plans for various employee groups where they can accumulate sick leave, and there's a payout when they leave the city. So that obligation has to be recorded as they're actually providing the service to the city. So it becomes a payroll or a payroll cost to us, a department cost at the time, which we report on the statements and set up as an obligation. We don't fund those. We fund based on what we're going to actually have to pay out during the year. That actually becomes our budget expense. So there is that unfunded amount that falls out here. And then finally, the reserves and reserve funds, which you're used to seeing, makes up the last component of our municipal equity.
Thank you. Questions?
Chelsea, do you want to do the presentation from the consultants?
We can do it if there's any questions on the statements first, or if you'd like Lori to go ahead.
Leave that up to the committee.
Whatever you think's best. Do you want to give the presentation?
Sure.
Okay,
I'd be happy
sure.
to. Great, thank you. I'll walk our audit findings report. I know a copy of the report has been just handed out at the start of this meeting. So if we turn ourselves to page 3, page 3 is our executive summary, which gives you a summary of where we are at today with respect to the audit. So our findings report tonight is very much a follow-on to the audit plan that we were here to present to this same committee back in November. So we've completed our audit, subject to the conversations here tonight at the committee level and ultimately council approval, which is anticipated to be on June the 12th. So in terms of our audit plan, we were able to execute in accordance with our plan, so there's no significant changes that led us to do things differently than what we had planned, which is great. So in terms of finalizing the audit, We're subject to one legal inquiry letter, which we will be getting closer to your audit report date, which will be the council approval date, which again, as I said, is June the 12th. And that's customary. We require that letter to be closer to your audit report date in case there's anything that happens in the intervening period. From an audit perspective, our subsequent event stays open until the audit report date, so we'll be in conversations with Desiree and her team as we get closer to that date. So our audit report that is in our report here, as well as in the front of the financial statements that Desiree just walked through, is a clean audit report. There are no significant findings with respect to the audit work, so it's ordinary course that you would have been familiar to in past years. On the right-hand side there on page 3, we speak to adjustments and differences. As part of our audit planning report, we had set out to set materiality at a level of $10 million, which came to a posting threshold of $500,000. So through the course of our work, we did not identify any differences in excess of that $500,000 number. So there are no differences to report here tonight as part of our audit findings. And I think that certainly speaks to the quality of the books and records of the finance team at the city, which is fantastic. In terms of control and other observations, again, similar story. We have not identified anything in terms of any significant deficiencies of internal controls over financial reporting that should be brought to the attention of this committee. In terms of critical accounting estimates, as Desiree mentioned when she walked through the financial statements, there is a significant liability on the books of the city related to the employee future benefits that is determined by the actuary. And in terms of accounting policies and practices, there have been no significant changes year over year, nor were there any changes to the accounting standards. So it really was a status quo year. Walking through the balance of the report, again, I won't stop on every page, but certainly stop me if there are any questions. But page 5 is a snapshot of all of the significant captions on the city's financial statements. This is very much a follow-on to our audit planning report, and you can see in terms of our response and our significant findings, we did not uncover any issues through the completion of all of our audit work. On page 6, I was going to point out, just as a reminder to the committee, in terms of our approach to payroll, in terms of the audit, we do look at the controls around the payroll process, consistent with past years, and certainly there have been no significant matters to bring to the attention of the committee either in that regard. Working our way through, page 9 of our report speaks to the financial statement presentations and disclosure. So in terms of the form and content, they're certainly adequate in accordance with the financial reporting framework, and there have been no substantive changes, nor did we expect there to be any this year. The other estimates that you would see in the financial statements speak to the carrying value of the tangible capital assets, as well as the completeness of any provision for accrued liabilities at the end of the year, being December 31. One thing I did want to spend a couple of minutes on is on page 10. If you would recall from our audit planning report, we had identified the system conversion that the city had underwent back on July 1, 2017. That was a mid-year conversion of the city's general ledger system from PeopleSoft to Microsoft Dynamics. It was certainly a large undertaking on the part of the city. And so from an audit perspective, we're required to make sure all of the data from the old system transitioned to the new system, and the data was accurate and it's complete. So we've done that as well at this point, utilizing some of our IT specialists to give us the assurance that was required for the audit. So all of that work has been complete and no issues were noted. Working our way through the balance of the report, as we work our way through the appendices, I wanted to stop on page 21, Appendix 3, which is our lien and audit. Again, if you had recalled from our audit planning report, we were pretty excited to talk about a new way we're starting to do some of our audits using some of the lien methodologies and techniques. So we've actually been able to do that with the city already this year as part of our audit for 2017. You can see there at the bottom of the page on page 21, we were able to do the human resource and payroll processes with the city back in October. So we've got a good document that outlines the city's processes for each of those significant parts of the organization, and we'll certainly be working, and there were some findings and some observations, and we'll be certainly working with the team over the course of the next 12 months to make sure the actionable items in there are being dealt with as we go along. So stay tuned for that one. And really, that's the balance of our report in terms of any findings. If there are any questions, I'd be happy to take them.
Thank you. Do we have any questions from councilors? Councilor Stroud.
A question for the treasurer. I have no issues with the audit findings. I think that's great. It was good to see the results there. My question has to do with just wrapping my head around the financial statement in the line about long-term liabilities. So on that sheet, which again is page 10 of the package, page 4 of the report, I guess. Ms. Kennedy went through it in detail before. So the long-term liabilities line, you'll see, and I only have the 2 years here to go by, of a large number, 292 million from 2016, 368 million from 2017, which is an increase of 76 million. And it's not so much that large increase I'm concerned with, because I understand there were some large liabilities assumed, which we probably understand, but it's more the page in that when you go to the note, which is note 11, which is page 28 or 22, depending on how you're counting. It tells you the principal and the interest, and that's something we can all probably relate to here on the committee, principal and interest, because anyone that's done a mortgage or whatever. Here we see the numbers are pretty similar between the interest and the principal. So in 2016, interest of 13 million, principal down payments of 12 million, and then in 2017, interest of 13.5 million and principal payments of almost 12.5 million. So that, my question is that where does the decision get made in how aggressively to pay down the principal? I just don't recall that decision at budget time, and I'm wondering when that gets done, because, you know, obviously we could choose to, that's like you would with a home, you could choose to pay it down faster or slower, because we're talking about, you know, 13.5 million of interest payments on the long-term debt. So I'm wondering, the question of the treasurer is when do we get to discuss that?
Thank you, through you, Mr. Chair. So that is part of when we bring the debenture issuance to council. We lay out what the payment terms are at that point. We generally will match up the term, so how fast we're paying it back, against the asset that we're taking the debt out on. So generally for our, and we also look at the cash flow on the reserve fund. So if we've got some healthy cash flow within the respective reserve fund, we may do something a little more aggressive in terms of a term, but that would come to council when they approve the debenture. So generally, if we're debenturing on equipment and that type of thing, it would be somewhere between the 10 to the 20-year mark. Our buildings tend to be 30 to 40, and we've had some of both of those. So it tends to match up to whatever asset we're, or whatever type of project we're borrowing on. I should just mention, because I thought where you were going, is why those payments haven't gone up when the debt's gone up. We actually issued the $87 million after July the 1st, so we would not have had a payment in 2017. So you will see them go up in 2018, because we'll have the both semi-annual payments in 2018.
Yeah, so that would have been my follow-up, because this number of the interest of 13.5 million, which is only a $500,000 increase over 2016, will actually be quite a bit higher in 2018 because of the 76 million of increased liabilities. So to sort of summarize that in our language, so if an asset is supposed to last 40 years, it's divided over the 40 years, the principal payment, so that in the end, you're basically paying an amount of the principal every year that you have the asset, and you're not paying it faster because you don't need to replace it until it needs to be replaced, and you're not paying it slower because then you'll be accruing liability. So that's sort of a policy that we always follow, and I know I've talked to the CAO about that before. But now that we've just assumed a much larger liability, maybe it might be time to talk about how we balance that, because otherwise we may find ourselves carrying a higher debt load than the average citizen might be comfortable with, and that's sort of what we're saying. Is there going to be a good time we could discuss that in committee of the whole or at budget time, or when would that be?
Through you, Mr. Chair. I would say at budget time, so we have, as you know, the 15-year models, and so we build into that not only the debt that's been issued, because that comes out of our reserve funds, that's where the payments come from, but also the debt we have yet to issue, that council's approved and we haven't issued, as well as debt that we have in our 15-year plans that we haven't asked council to approve yet, but we build those into the model. So that's all part of that decision as well. So I would say that's the time to do it. And certainly we look at that when we're building out those 15-year models for budget to make sure we're going to be able to afford whatever the term is that we're recommending.
Right, so I recall from budget up, so that's when you had some graphs up on the screen where you had a line and you had the liabilities going up over time and then sort of peaking in a few years and then coming back down again as we caught up to some of the large liabilities that we've taken on. That's that kind of graphic in that whole situation. So there's a lot of things that go into it, but that's the last time we talked.
That's the one,
Okay.
yes.
All right, I'm satisfied with that. Thank you.
Any friends from the committee? Councillor Stroud, could you take the chair?
Sure, I take the chair.
Just a quick question about page number. Of course, I lost where I was. I think it's page number 4. Wait. Nope, it is page number 11. Property taxation. Is that residential, commercial, and industrial all combined? And if it is, would it make more sense just for councillors to look at this stuff and understand if they were broken down into different components? My question is kind of similar to Councillor Stroud in the sense that sometimes when we look at these, when councils are coming up with strategies and goals, long-term goals over 4 or 5 or 6 or 7 years, sometimes that can help us make decisions when we know what different tax bases we have. For example, I think some people would say that Kingston has a low industrial and commercial tax base compared to residential, compared to other cities. So is that what does that first line item entail?
So yes, through you, Mr. Chair. So that is the property taxation for all the classes within there, as well as the supplementary taxes, which is why it's more than budget, because that always puts us up over the budget. We could do that for sure. We can break it out however we want, either on the statement or into a note. What I'd suggest is I'm going to make a note of that because I think that's something that would be useful at budget time to be able to see some of that breakdown as well. The statements we try to keep at a fairly high level, not get too much detail into it based on what they're used for. But I think that's point well taken. I think that's useful information for council to have. So I think maybe at budget time we could certainly make sure we're providing that breakdown.
I totally forget the way things panned out when we first got elected, but did we get how does the new council get presented with this type of information when it comes to setting their our strategic plan? I think that this is like super important because this is where the rubber hits the road, so to speak, as far as the companies run. So I almost wonder if we look at different tax bases and different approaches that we can take, how a new council could get addressed so that can help them make a strategic plan that is at a very high level. What's your take on that?
Yeah, I agree. I think that's a good time to be looking at that because part of the strategic planning session, I've got going back 3.5 years now to remember, but part of the strategic planning session is about council's desires around the tax rate for their term. And so if I remember correctly, I think we did provide some of that information, the debt reports, the reserve fund models. I think we did an overview of that for council before those discussions happen. So I think that's a perfect place as well to talk about that in terms of what our tax base is, what a 1% increase means to the various classes and some of that information for sure.
Okay, very good. Thank you. Thanks. Do we have any further questions from the committee? Seeing none, we do have a recommendation before us that the Administrative Policies Committee receive KPMG's 2017 audited findings report for the Corporation of the City of Kingston for the year ended December 31st, 2017, and the 2017 audit financial statements of the Corporation of the City of Kingston for the year end December 31st, 2017, and that the Administrative Policies Committee recommend that Council receive and approve the audited financial statements of the Corporation of the City of Kingston for the year ended December 31st, 2017, as Exhibit A. Do I have a mover for the recommendation? Councillor Osanek, seconded by Councillor Stroud. Do we have any discussion? Councillor Stroud?
I just want to say, because you brought it up, that I think that information, the breakdown between the various property classes would be very helpful at some point, not necessarily when we do the audited statements, but at some point for when we're talking more strategically, to have the breakdown between property classes at our fingertips. And the year-over-year comparison growth, like is residential growing, industrial, and so on. It does help shape the discussions. Thank you.
Could you take the chair, Councillor Stroud?
I take the chair and I recognize you.
Thanks. I guess my point was that I feel like with the new addition to the city with Frulac and Fahey, those do have an impact on this. That just in my day job, when I go to different cities and tell people, you know, we're selling buildings at such and such $1 per square foot, they're very intrigued. They're very intrigued by the rental rates. And then you tell them the tax rate per household, and their eyebrows hit the ceiling compared to Toronto. So for example, in Toronto, I think that their tax rate's let's say it's 0.8, and ours is 1.37. So if you can lower the burden per household from the residential component, the only way to do that would be to increase it, I think, from the industrial and commercial components, because our major employers like Queen's University, St. Lawrence College, the hospitals, corrections, none of our major employers are taxed. So in some way, the greatest asset in our city is also our biggest flaw in the same light. So I think that when we get different organizations like Fahey and Frulac, it's important for councillors to know how beneficial that can be for a smaller community like ourselves. And I think that when we do strategic planning, considering the amount of tax base, or the amount of tax burden per household should be a priority. So, Councillor Stroud? Yeah, that's it.
Yeah, okay, so I'm turning the chair just with the quick comment that you didn't mention non-tax revenue in the whole overburden. Go ahead.
Okay, so all those in favor? And that passes. We will resolve into the Board of Management for Rideau Crest Home. I need a mover. Moved by Councillor Schell, seconded by Councillor Osanek. Can I get a...
Did vote on that technically.
Oh, okay. All those in favor? That passes. Could I get an introduction, please?
Thank you, Mr. So it's a fairly brief report before you tonight. The report contains information from February through to the end of March 2018. Rideau Crest Home has maintained an occupancy rate of 98.4% in February and 98.6% in March. The occupancy rate for January through to the end of March is 98.81%. Rideau Crest Home had 9 incidents reportable to the Ministry of Health and Long-Term Care for February through to the end of March. The ministry did not visit the home the month of February. However, they did come in for 4 days during the month of March to investigate 3 critical incidents, a complaint, and follow up to a compliance order that was issued in January of this year. As a result of this visit, the home was placed back in compliance related to the order issued, and the home, as a result, was also issued 1 written notification for a critical incident. There are currently 377 people on the waiting list for the home at this time. Public Health came in and declared 2 outbreaks during this reporting period, 1 confirmed influenza A case and another RSV case with 7 residents that presented with symptoms. As of the end of March 2018, Rideau Crest Home has spent 15.6% of its municipal contribution, which is $254,000 under budget. A majority of the budget surplus is due to timing related to payroll and other non-compensation timing differences, including payments for extended care invoices, physiotherapy services, food, and other resident supplies. You may note one of the larger discrepancies was dietary, was noted to be $143,000 underspent. However, in the beginning of April, there was $100,000 worth of invoices that were processed for that month. And that's all I have for this report. I'm happy to answer any questions.
Finally, do we have any questions from the committee? Councillor Stroud.
Just have a Ms. Keys, thank you. Just clarification, really. I think I know the answer, but I think it should be stated openly, especially since this is on the record. When it says the home was placed back in compliance related to the order, this was a compliance order issued in 2018. So, okay, so in January of this year, there was a compliance order from the ministry about something that wasn't in compliance at the home, and then they followed up, and then they said you are now in compliance, like basically the compliance order is resolved. Is that what that means?
Yes, that's exactly what that means. So they issued us a compliance order in January. We are then mandated to create an action plan to ensure that we remain in compliance with that order, which we've done. They do come back after 30 days, anytime after 30 days, to ensure that you are back in compliance, and that's what they've done in March.
Right. So that's basically resolved. And then the complaint that's mentioned here is something separate. It doesn't say whether the complaint was resolved. Can you speak about that?
Yep, so the complaint was something completely separate. It was a family complaint related to a resident that was sent to hospital, and there is a medical leave time period for that resident to remain in hospital. After that time period, they do lose their bed at the home and then can be placed back on the waiting list to return to the home. The family, this happened to this resident, and they did end up losing their bed and were upset, as they should be, and did put a complaint into the ministry. The ministry did investigate that, and it was an unfounded complaint.
Right. In other words, they did their due diligence, they investigated, but there wasn't anything further to add at that point.
That's right.
So it's sort of completed.
Yes.
It wasn't resolved to their satisfaction probably, but they've received the answer from the ministry, basically.
Right.
Okay, and then the other, could you just give us just a very brief description of what would these three critical incidents, what type of things are those, like falls and injuries, or what are we talking about here?
So for the month of March, there was 3 cases of abuse or alleged abuse, 1 being emotional abuse from staff to residents, 2 being neglect from staff to residents, which were unfounded. We had 2 cases of sexual abuse, resident to resident, 1 case of physical abuse, resident to resident, and 1 hip fracture, so a fall which resulted in a hip fracture, which we do report to the ministry, and that was for the month of February. For the month of March, there was another fall which resulted in a hip fracture, and then the outbreak.
Okay, and just follow up, final one. So the 3 critical incidents, that's what was investigated by the ministry, but there were other critical incidents that were reported and not investigated, is that correct?
Yes, they don't investigate all critical incidents. They just, I'm not sure how they pick which ones they are going to investigate. Usually if they're staff to resident, they do tend to look to investigate those. So they don't do a full investigation of all critical incidents.
And the possible outcome of the critical incident investigation, the ones that they choose to investigate, is either a written notification, as we got in 1 case, or no further action. Is that correct?
That's correct.
Okay, thank you.
Councillor Schell.
Mr. Chair, is the number of people on the waiting list going up all the time?
In the 4 years that I've been at the home, it's hovered around the 400 mark. So we see a slight decrease at this time, but it kind of varies within 20 to 25 people, but it's kind of hovered around that 400 mark since I've been there in 4 years.
And would this number of people generally be on a wait list, the same person for 3 nursing homes?
Yes.
Okay.
Yeah.
And what's the average wait time? Or
It depends if it's a crisis placement or not. So crisis placements could range from a few weeks to a few months. If it's just somebody who's gone on the wait list as an ordinary person at home just looking to make plans for the future, it can be upwards of over a year for that wait. It's been up to 2 years for that wait.
oh, that's.
Yeah.
I know it's actually
it's pretty
sounds quite
significant.
reasonable compared to the housing and
Yeah.
that sort of thing. But, and I know certainly with the election coming, there's been discussion of adding many, many more
Yes.
long-term bids, not retirement home bids, but
Right.
long-term. And obviously, there's a need, if just the Kingston area has
Absolutely.
this many, yeah.
Yeah, absolutely.
Okay, thank you.
You're welcome.
Any further questions from the committee? Seeing none? Okay. Could I get a motion to rise from the Reader Crest Board of Management? Councillor Osanek, second by Councillor Shell. All those in favor? That passes. We have no new motions, no notices of motion. Is there any other business? Seeing none, we do not have any correspondence. The date of the next meeting is Wednesday, July 4th, 2018. Do I have a motion to adjourn? Councillor Osanek, seconded by Councillor Stroud. All those in favor? We're adjourned.